Welcome to Mark Investing, where we analyze the hidden dangers lurking within the stock market and the artificial intelligence revolution today. The global financial markets are currently reaching dizzying all time highs, driven almost entirely by the explosive promise of new AI technology. However, beneath this shiny surface lies a fragile structure that could potentially collapse, wiping out the wealth of unprepared retail investors. We have identified three critical warning signs that suggest the current market enthusiasm might actually be a prelude to a correction. The market is no longer a broad reflection of the economy, but has become heavily concentrated in just a few massive names. This brings us to the first major warning sign, which is the unprecedented dominance of the group known as the Magnificent Seven. These seven technology giants now account for over one-third of the entire value of the top 500 companies in America. Even if you think you are diversifying by buying an index fund, you are actually placing a massive bet on AI. The valuations of these companies have detached from traditional metrics, fueled by the belief that artificial intelligence will change everything immediately. This herd mentality creates a dangerous situation where any bad news from these specific companies could trigger a massive market sell off. Nvidia has become the poster child of this movement, selling the essential chips that power the entire artificial intelligence global infrastructure. However, we must ask ourselves if this incredible growth is based on real demand or a circular loop of corporate spending. This leads us to the second warning sign, which we call the AI money printer and the illusion of fake revenue. Big tech companies are investing billions into smaller AI startups, providing them with the capital needed to purchase expensive hardware equipment. These startups then take that investment money and immediately send it back to companies like Nvidia to buy their advanced chips. This creates a loop where revenue is recorded and stock prices soar, but very little profit is generated from end users. The ultimate question is whether everyday consumers are actually willing to pay enough to justify the trillions being spent on infrastructure. If the consumer demand does not materialize soon, this circular flow of money will stop, leaving massive debts and useless hardware. History has shown us that technological bubbles often burst when the hype of the technology outpaces the reality of its adoption. Now we face the third and perhaps most technical warning sign, which experts are calling the impending data wall of 2027. Artificial intelligence models require massive amounts of human generated data to learn, improve, and become smarter than they are currently today. Researchers predict that by the year 2027, AI companies will have consumed nearly all high quality public text data available online. When fresh human data runs out, models might have to train on data generated by other AI, leading to model collapse. If the improvement in artificial intelligence capabilities slows down significantly, the astronomical valuations of these tech companies will be impossible to justify. Investors are paying high prices today for the expectation of exponential growth tomorrow, but that growth is hitting a physical limit. So, with these three major risks looming over the market, what should an intelligent investor do to protect their financial future? Panic is never a strategy. Instead, we must adopt a disciplined approach that has worked through every market cycle in history. The first step is to ensure you are not fully exposed to just one sector, no matter how promising it looks. Continue to invest periodically into low cost index funds, which automatically adjust to changes in the market winners and losers over time. Dollar cost averaging removes the emotional stress of trying to time the market, allowing you to buy more shares when prices drop. Diversification is your only free lunch in finance. Consider adding assets that do not move in perfect sync with tech stocks. Assets like gold or real estate can act as a stabilizing anchor for your portfolio when the stock market becomes volatile. Perhaps the most important investment you can make right now is in your own ability to earn a higher income. Increasing your cash flow provides you with the dry powder needed to buy high quality assets at a discount during a crash. When the bubble eventually bursts and prices fall, those with extra cash and a calm mind will build generational wealth. You do not need to predict the exact moment the market turns. You only need to be prepared to survive it. As we approach the critical year of 2027, the landscape of technology and finance will likely look very different from today. Artificial intelligence is a powerful tool that will change the world, but the financial mania surrounding it follows old human patterns. We have seen the dot-com bubble, the housing crisis, and now the AI rally. The names change, but the psychology remains. Your goal is not to get rich quick this year, but to ensure you remain wealthy and secure for decades to come. The dominance of the Magnificent Seven may fade, but the principles of sound investing and risk management will always remain true. Stay the course, keep your expenses low, invest consistently, and do not let the fear of missing out drive your decisions. We will continue to monitor these warning signs closely and provide you with the updates you need to navigate these waters. Knowledge is the best hedge against uncertainty. The more you understand the mechanics of the market, the less you will fear. Let your long term financial goals be your compass, rather than the daily noise and hype generated by financial news media outlets. Small, consistent actions taken today will ripple out to create massive results for your financial well being in the distant future. Take the time to educate yourself further on asset allocation and the history of market bubbles to strengthen your investment thesis. Think of this channel as your lighthouse, helping you spot the rocks and dangerous currents before they can damage your portfolio. Remember that volatility is the price of admission for stock market returns. Do not let short term drops scare you away. Always keep an emergency fund separate from your investments so you are never forced to sell your stocks at a loss. Focus on the fundamental value of the companies you own, not just the story that Wall Street is currently selling you. A well balanced portfolio works like a fine watch. Different parts serve different functions, but together they keep you on time. The storm of AI hype will eventually pass, and the companies with real earnings and sustainable business models will be left standing. Investing is a marathon, not a sprint. Your patience and discipline are far more valuable than any hot stock tip. Allow the power of compound interest to work for you by staying invested through the highs and the lows of the cycle. Ultimately, money is just a tool to provide security and freedom for you and the people you care about most. Ignore the noise, stick to your plan, and remember that the biggest risk is often not taking any risk at all. Build your financial roots deep so that no matter how hard the winds of the market blow, you will not fall. Technology will keep evolving, and markets will keep adapting. Your strategy should be flexible enough to handle whatever comes next. Keep track of your decisions and learn from your mistakes. The best investor you can rely on is your future self. If you found value in this analysis, please consider subscribing to the channel to join our community of smart investors. Share your thoughts in the comments below. Do you think the AI bubble is about to burst, or is it just beginning? We appreciate your time and attention today. Remember that the best investment you can always make is in your own education. Keep an eye on the Magnificent Seven, watch out for the revenue loop, and be aware of the coming data wall. With the right knowledge and a steady hand, you can unlock the opportunities that this volatile market will surely present to you. Stay safe in the markets, keep diversifying your portfolio, and never stop learning about the forces that shape our financial world. Thank you for watching Mark Investing. Stay disciplined, keep learning, and subscribe for more insights into navigating this changing financial world.